All right, let's get some multiple choice questions related to the bank reconciliation process. And our first question says, a check returned by the bank marked NSF means no service fee. Yeah, right. No signature found, not satisfactorily filled out, not sufficient funds. What do you think? Not sufficient funds or non-sufficient funds on the check. That's a situation where the company deposits a check, they record that into their own cash account, and then they find out later that the check did not clear and they have to make an adjustment and remove those funds from their cash balance until they're able to collect on that check. Okay. A debit memorandum would not be issued by the bank for. So first of all, I want to make sure that we understand that in this case, a debit memo from the bank is a deduction from the company's bank account balance. Okay, so it says A, service charge, a bank service charge. B, the issuance of traveler's checks. C, the wiring of funds. And D, the collection of a notes receivable. Okay, so a bank service charge, they absolutely would issue a debit memo for a service charge. Now what they mean here on B is when they say the issuance of traveler's checks is the owner of the business, I'm assuming traveler's checks are not really much of a thing anymore, but let's say that the owner of the business decides that he wants to take some of the cash in the account and convert that into traveler's checks. So if that happens, they are going to debit the account for the amount of the traveler's checks. The wiring of funds, so we've got money in our account and we're going to wire that somewhere. So this is a debit memo. However, the collection of a notes receivable is going to add money to the business account. And remember, when we're talking about banks, the debit and credit language is backwards. Okay, so this would cause a credit memo. D would be a credit memo, and therefore it would not be a debit memo, and that is our correct answer. All right, deposits in transit. It says A, have been recorded on the company's books but not yet by the bank. Have been recorded by the bank but not yet by the company. Have not been recorded by the bank or the company are customers' checks that have not yet been received by the company. So who makes a deposit? Well, the company does. So they can't make the deposit if they haven't received the check from the customer, so that's wrong. Haven't been recorded by the bank or the company. Well, the company makes the deposit, so that's wrong. Have been recorded by the bank but not yet by the company. Well, that's backwards. Have been recorded on the company's books but not yet by the bank. That's our answer. Okay, it says a bank reconciliation should be prepared whenever the bank refuses to lend the company money, when an employee is suspected of fraud, to explain any differences between the depositor's balance per books with the balance per bank. Balance per books, balance per bank. C is going to be our correct answer. Let's see here, almost skipped one. In preparing a bank reconciliation, outstanding checks are, well, the first thing we need to understand, what are outstanding checks? Outstanding checks are checks that have been written by the company, and they know they've written them, but they have not yet hit the bank. Choice A, added to the balance per bank. No, they're going to be subtracted. B, deducted from the balance per books. Well, they are, but not during the bank reconciliation process. So A was wrong. B is wrong also because it was already done. It's not happening during the bank reconciliation. It was done when they wrote the check. Added to the balance per books, no. And deducted from the balance per bank, yes, because the bank is showing too much money because these checks haven't hit yet. D is our correct answer. Which of the following would be added to the balance per bank on a bank reconciliation? So we're looking for something that the bank does not know. What does the bank not know? Okay, added. Oh, and it has to be an addition to. Don't know, and it's an add. Okay, outstanding checks. Well, they don't know about that, but that's a subtraction. Wrong. Deposits in transit, they don't know about them because they're in transit, and that would be an addition. That is going to be our correct answer. If a check correctly written, so it's correctly written and paid by the bank for $628 is incorrectly recorded on the company's books for $682, the appropriate treatment on the bank reconciliation would be 2. Okay, so they wrote the check for $628, and that is correct. Say, this is good. And it was paid by the bank $628. Okay, the only mistake was whenever they entered into the accounting records, they entered it for too much. So we have to figure out how much they reduced cash by. Okay, so if we were to take the $682 that they recorded, we would look at the difference here, that's going to come up to $54. So our choice A is going to be the correct answer. We're going to add $54 to the book's balance because we previously subtracted too much. Too much. So if we previously reduced our cash balance by $54 too much, now we got to add it back to the book balance, the company balance. Which of the following items on a bank reconciliation would require an adjustment on the company's books? Okay, choice A, an error by the bank. No, because whatever occurred with this transaction, it is correct on the company's books. Outstanding checks, no, they already know about outstanding checks. They were the ones that wrote the checks. A bank service charge, that is our correct answer, because even if the company knows that they're going to have a service charge, they may very well not know the amount of the service charge. So C is the correct answer.